course, we're hearing from more big banks this week after a wave of earnings results showed surprisingly positive signs for the industry last week. Charles Schwab is kicking off the earnings parade this morning. The financial services firm beat quarterly profit estimates, and its net interest revenue came in above estimates. But did the company, they also called out an 11% drop in bank deposits. Let's dive into the banks with John Heltman. He's American Banker's Washington Bureau Chief and host of the podcast Bank Shot. Good morning to you. So we've been wading through these earnings reports, and there's a sense that what crisis? Do you think the crisis is over, or this might flare up again over the summer?
I think it's too early to say with any definitive, knowledge, but because each bank is different. The banks that have reported so far, some of the names that you've reported already, JP Morgan, Wells Fargo did better than expected. But these are some of the bigger banks. The place to watch is the mid-sized regionals, the PNCs, the M&Ts. PNC's numbers came in last week, and they were, decent, although they're warning of concerns about tighter net interest margins with deposit prices or cost of funds really going up and cost of loans that they are long-dated loans staying the same. So that's something to watch, especially for smaller and mid-sized banks. John,
from what we've heard from the banks so far is them talking about how healthy the consumer is right now. But I mean, this is all, I think, the health of the consumer more relative than anything else, considering the backdrop that many of the banks had cited with the consumers in years past, saying, hey, yeah, they have been able to save more. They've been able to put that away. And for what we've seen as of recent, this is perhaps one of the most telegraphed recessions where consumers are going to no doubt think about, okay, what does this mean for how I am either managing the money that I've already deposited, withdrawing some money right now, or even putting cash to work elsewhere?
Yeah, I mean, I think you're seeing deposit outflows from non-interest bearing accounts to interest bearing accounts on the commercial side and on the consumer side. And that's good for consumers. That means that they're getting money from their money in a way that they haven't been for really quite some time. That's good for consumers, and it's kind of not as good for banks, especially banks that already have tight net interest margins.
And John, we're also seeing shares of Charles Schwab very much in focus since the turmoil erupted in March. The CEO came out there, tried to reassure investors. Stock's down about 2% on its results this morning. And I think it's because of the 11% drop in deposits. How much of a problem is that for Charles Schwab, and how concerned should investors be?
Well, I think it's 11% is a lot. That is a big drop, but it's also a very big company with a very deep deposit base, which makes me not quite as concerned. I think a 2%, decline is not a running for the gates, so I wouldn't be too concerned.
But we also heard a drop in deposits more severe at one of their competitor banks as well. Just last week, I believe it was Citi that had disclosed their drop in deposits during the most recent quarter. Does all of that tell you that the banking crisis, if we've already seen some of these drops in deposits be reported, that the banking crisis itself or the turmoil around it is over? Or do you believe that there's more of those deposits that are still left to flee some of the banks right now?
Very possible. I mean, you saw, was it last month, 300 billion in deposits left banks, and something like 240 billion went into money market funds. And that's for the simple reason that they make more money in a money market fund than in a bank, although they don't have the security of deposit insurance that you have with a bank. So this is a problem that regulators are going to have to grapple with sooner or later to figure out how to even the playing field between money market funds and banks and bank deposits to figure out how to stem that tide. But it's not, I don't predict it being a giant rush, like a huge thing, but it's going to be a slow drip over time, and a slow drip that is going to impact, especially, as I said, the smaller and medium-sized banks.
All right, American Banker's Washington Bureau Chief John Heltman, thanks so much for joining us here this morning, breaking down all of the bank earnings that have come about thus far. We've got a few more set to report. We appreciate the time.
Thank you.
Definitely.